All right. Should be good now. What is going on? Okay. That'll have to do. Cool. All right. What's up? What's good? Did y'all just see Nas open up like that? Wow. I can't say I'm too surprised though. I mean, we've had a lot of let's say drama, but like, that whole thing that's going on with Trump and Greenland and all that. Doesn't surprise me that Nas did this drop to open up the week, which is pretty wild. But yeah, hope you guys are doing great. What's up? Hope everyone's doing well. Should be having everybody tapping in here in the next couple minutes. Saying what's up, bro? Is that a Barcelona thing on your profile picture? Looks like Barca. If that is Barca, salute. Even though they had a terrible game today. I don't even want to talk about that. All right. Yeesh. Well, this zone doesn't matter to me much anymore. Woof. Okay. Yeah, Barca. All right, cool. Yeah, today was a bit disappointing of a game, as you know. Man, should we just buy Nas right now? Just completely buy it? This is a joke, by the way. I wouldn't do it. But I mean, I could definitely see the market lasting off and recovering this crazy gap that we just formed here, but that is not necessarily the wisest idea. All right. So, a brand new week is here. Let's get straight into it. I was going to say, as we started this, like, some of my thoughts on Nas. Obviously, that kind of just changed the instant that I saw this death candle print right now. So, um, we're gonna have to discuss that, but I'm sure it depends if you keep up with like world events or not. I know that with trading, like, we look at financial news and stuff like that, but we don't necessarily look at like world news. I don't know. It just depends. I'm not really like a fundamentals trader, but if the news is serious enough, it's gonna make an impact on the market. So, yeah, big thing right now. If you haven't been, paying attention, was like U.S. and Greenland, and there's like a whole issue going on now where America kind of wants to take some control of that territory because of fear of like you know Russia or China occupying and having stuff close to the US, and there's always a bunch of backstories they never even tell you on the news about what's really going on. But this whole issue right here, you know was something that market analysts were like, oh, you're gonna see the market open up really bad on Tuesday or Monday or whatever. They say Tuesday because tomorrow's technically a holiday with Martin Luther King Day, by the way, in case you guys didn't realize that. So like we won't really have an actual like solid trading day until Tuesday. I mean, you could, trade Martin Luther King holiday. Um, it's just a general rule of thumb. Obviously, is to like, you know, at least at a minimum, not expect much out of a holiday. I'm not gonna say you can't trade it. You can, but there's just things that could happen like slower price action, choppy market, and then there's sometimes where like the holiday does produce a good move, but again, it's not something you should bet on, if that makes sense. So again, Tuesday will be like where we have like real price action to trade, I guess you can say. But yeah, basically when it comes to Nasdaq, if we look at the higher time frames first here, we had a lot of liquidity that I was kind of eyeing for a while at these highs here, and you can see how we've basically swept those from Monday the 12th and the 13th. So like last week, Monday, Tuesday, first thing the market did was finally reach for these highs here. And at that point, you know, we kind of saw a stall out, a nice drop, recovery, and then a continuation that, I mean, now we see it much more clearly with how market just opened up now. So yeah, I think long term though, this whole thing now with the Greenland stuff could be the narrative that actually takes us lower to like take out these lows here in price. But I was keeping my eye on all-time highs being a possibility soon. My overall macro analysis, I don't remember if I covered it on the Sundays before now, but when we were like down here in price, I did expect these highs to definitely get rated as like the main liquidity target. And then from there, I did expect some type of retracement after you grab major liquidity. And then I thought this like leg here would have been like our run out towards all-time highs, but as we could see, we never were able to re-break above here, just respected it, and now we're seeing price open up, gunning for lows. So, I mean, it's a big candle. Price could easily recover this, like, literally, like, tonight, and give me another fresh perspective. But, I don't know, based on the news that's going on right now, and the fact that we're, like, liquidity grabbing and dropping, I would think that, you know, this is a very important price point here to keep an eye on. If price wants to keep going bearish, we'll target this low, and then if we're really bearish, we'll gun for this one. But I don't know, right now, if I had to just like take a wild guess, I would say maybe we get something like this where we take this low and then we end up chopping back above here and then reaching towards all-time highs. So I mean, that's just, this doesn't really mean much, to be quite honest. This is just me visualizing and kind of getting an idea of the narrative I think could happen. But ultimately, you just want to pay attention to where there's like the main liquidity points and all that. So as far as like the buy side, most of that, you know, did its damage once we took all these highs here from basically like the last month of price action. And so yeah, I think the momentum and everything has obviously shifted lower. So this was my first thing I was paying attention to before the market opened. We already saw it literally run through that. So yeah, the next sell side liquidity would obviously be these lows here. So if we do continue seeing confirmations with our entry models and stuff for sells, then yeah, this would be kind of like where I would expect the market to go. Will we eventually get here? I don't know. You know, it's gonna, you know, we're gonna have to see how price reacts around here first. But yeah, the sell side is definitely interesting as like where I think we could go next and take it from there. Okay, so yeah, that's kind of just like a overall higher time frame analysis looking at the 4 hour. Small time frame wise, again, usually when you have these huge dips in the market at market open, we could easily recover that right away, but we're just thinking of the fundamentals right now. That whole Greenland thing going on is going to be important. As far as other news, let me check NVIDIA. So we have earnings for NVIDIA on the 25th of February. So that's like a month away-ish. And then Apple, I think, is closer. Apple is January 29th. So this will be like in a week and change. So earnings for Apple is something to pay attention to. That comes in like at 4 p.m. On that Thursday, like towards market closure. So I don't know. I always look at the earnings and stuff like that for NVIDIA and Apple because those do tend to create some pretty nasty spikes in price towards the end of the market closure on those days. But yeah, definitely the macro news about the Greenland stuff is the main thing. And then if we actually look at financial news. Again, tomorrow we have a holiday. Tuesday there's not much. Wednesday we have Trump speaking early. At 8:30 we have some annual meetings here all day as well. So Wednesday overall will be a pretty like interesting day. And then Thursday and Friday we have some high impact stuff too. So there's gonna be a lot of news this week. I think the volatility is definitely gonna be kicking up heavy this week. Between all the financial news here and then the world news going on with Greenland. So expect expect a lot of volatility, I would say. Still needing more classes to scalp. Okay. Yeah, I'll talk about that as well. I mean, obviously, the more in-depth analysis of like day-to-day price action that I do, will be on Akashek. So if you're obviously on there, you'll get to see that in real time. But yeah, as far as like the stuff that I've been showing you guys for scalping NAS, ultimately what I said throughout the week was like, you can do it, but you don't have to do it. At the end of the day, I've given you guys a model with Liberty X that is very it's a more relaxed style of trading. You're not going to take that many positions. You have more time to plan out the trade and execute without too much pressure versus if you're scalping on the 1 minute or the 5 minute, you're going to have to be very on your toes with confirmations, criteria, executing, moving stops to break even way more aggressively than we do with Liberty X. Like, it's a different flow, and so I introduce it for people that are more in tune or they like scalping more, but it's not for everybody. It just depends, and I wouldn't say it's for you or not for you just based off of 1 week of trying it and whatever. Like, the failure of executing is not what you need to focus on. If you need to know like whether that's your strategy or not, it's more so, does it make sense to you? Do you feel comfortable? Are you somebody that can't sit in markets for a long time? Like, that's where scalping is more for you in those situations. But yeah, I think on Friday we had a beautiful Liberty X setup. We actually had multiple ways you could have played it, but definitely like the first 15 minutes is where the main nice entry came. So Liberty X, what we wait for is all the confirmations based on breaking Asia low or the high, depending if you're buying or selling, looking at where the VWAP is, and then looking for that 10 a.m. market manipulation above, and then the crossover. So basically, the Liberty X setup from Friday was you have that crossover above 10 a.m. here, and then you have your entry criteria here as price starts to break back below 10 a.m. open price. Because you had a bearish Asia breaking right below that. Like 10 a.m. was literally right at Asia low, so breaking below Asia, breaking below 10 a.m. And then that day, sometimes people ask me like, oh, should I use a 50 or should I use a 30-point stop? And what I always say is like, if a 50-point stop loss, starts to cover some highs in the market that a 30-point doesn't necessarily do, then it makes sense to go with 50. But if a 30 and a 50 essentially do the same job, then I would rather go for 50. Now you can even argue for like 40, right? Like I don't think 50 was necessary on Friday once you start getting the crossback at the 10 a.m. open price right here. And if you don't know how the strategy works, obviously make sure that on Akashek you guys are in tune to the live sessions. My academy should be getting updated. We just had some issues with like uploading my sessions and doing a bunch of stuff last week, so the content's a little bit backed up. But ultimately, like if you're on the sessions and if you've watched the last couple months of sessions, I explained the strategy many times. Can you explain VWAP again? What are you looking for in that scenario? Honestly, look, VWAP is like the least important thing out of everything. But essentially, VWAP is just it's an average price based on volume. So, for example, the VWAP, if you're selling, you want the VWAP to act as like a resistance. Like it's supposed to be above price. So for example, if you're getting like all the confirmations here, but the VWAP is under price, there's not many situations where that should be the case, to be quite honest with you, unless you have some like crazy spiking. That could be where you have the VWAP under price and then you get the other confirmations. That's not what we want to see. What you want to see is like the VWAP being on top of price if we're looking to sell, and you want it to be under price acting as support if we're looking to buy. That's really all the VWAP is for. And again, that's like if I had to eliminate a confirmation, I would eliminate that one. But it's just, it'll filter out very specific scenarios where price might have chopped around and maybe we got like a very indecisive 4-hour candle from 6 a.m. You know what I mean? Ooh, what happened here? What? Yo, this is tripping. Okay, I don't know what that was all about. Start new. Okay, here we go. So yeah, this was Friday. Again, for the confirmations that I show you guys on the sessions and everything, you have this. And so on that day, you see you had 6 a.m. candle on the 4-hour time frame was bearish. So automatically you should be having a sell bias. Asia was right at 10 a.m. Like Asia low at least was right at 10 a.m. open price. So breaking below Asia and 10 a.m. you have those confirmations stacked up. And then the VWAP you can see is above price, right? So as long as the VWAP is above price, then that is also like in alignment with the idea. Again, the only time that all the confirmations will be there except VWAP is if price has created a very indecisive 4-hour candle where maybe it's like chopped like this, and so the VWAP is kind of like something like this, and you don't get the, like, it's probably like under price. But that's what I'm saying, like there's not many scenarios, like out of every 10 Liberty X setups, very like maybe 1 out of 10, maybe probably even less, you'll have the VWAP like fight against you. So I will say it's potentially a redundant confirmation if I'm being 100% honest with y'all. But at the end of the day, if it can filter out specific days and help us avoid taking a loss or whatever, then hey, doesn't hurt. You know what I mean? But yeah, I would say the most important aspect of everything though is just understanding like what the higher time frame narrative is. So if you have a bearish 6 a.m. candle, I'm focused on selling. If it's bullish, I'm buying. And then you just want to make sure the session-based liquidity is agreeing with us. So, you know, if we're breaking above Asia, you're looking for buys. If you're breaking below Asia, you're looking for sells. That's stuff that I always taught from the beginning with Liberty before I did Liberty X, if that makes sense. So yeah, the last thing, the main thing is really power of 3, where you have accumulation, manipulation, and then distribution. So 10 a.m. hits, I want to see price again either sit around for a little bit, spike above our entry, and then cross back over, and then the stop should be covering the high. That's really like the main idea. Not every time are you gonna have those scenarios where you could do that, right? But ideally, you want the entry to be with a stop loss that covers whatever that manipulation was. Okay, because again, if we're expecting, well, you have to understand the idea of the strategy too. The idea is that we're going to be continuing the momentum of the previous 4-hour window, but we don't want to jump in right away because usually, candles will form a wick on both sides of price, most candles. So if I jump in right at 10 a.m. just because the 4-hour candle had closed bearish the previous window, I still know that most candles, healthy candles at least, should produce a wick to the upside before going lower. Like even the previous 4-hour candle, you can see it did that, right? It opened at 6, spikes up, and then ends up closing down here. So if at 6 a.m. you try doing the same thing, selling, but then you have this wick that takes you out, you just took a loss and then price tanks. So it's the same thing. It's not because it's 10 a.m. that you need to see the manipulation. It's just any candle in general will usually have a open, a high, a low, and a close. So if you're expecting this 4-hour candle from 10 to 2 to be a bearish candle, and it might not even fully close as a bearish candle by the time 2 p.m. rolls around. But you know, maybe the first hour or 2 hours of that 4-hour window from 10 to 2 to produce a 2-to-1 trade, that's all you need. So again, you know, you have price at 10 a.m. maybe drop, and then it makes the manipulation above, and then it starts to cross back over. So you can see how that wick forms, and then you get the continuation where the candle starts breaking lower. And so if that, you know, manipulation above 10 a.m. forms that wick, the idea is it shouldn't do it again. If we're right on direction, that high shouldn't, you know, get crossed again. Now it could happen. You know, there's no rules that says that price can't do that. But this is how you play probabilities, and you backtest and you observe things in price, and then you make decisions like that. So yeah, this high is roughly about 35 points in this situation from Friday. So you could have used 40 if you are like scared or whatever. But even 40 is better than 50 when you're talking about risk to reward ratios. For me, I just look at it like this. A 30-point stop basically covers the high. So if I can get much better risk to reward where I can go break even earlier and squeeze more out of the trade, I just don't see the point of dropping a 50-pointer here that gives you way more cushion above the high than you need than 30. So that's the criteria I look at for like when I use 30 or 50 points. And it could be a different number other than 30 or 50. If the conditions are, let's say the volatility is super high this week because of all the news. Dude, like the manipulation above 10 a.m. might be 60 or 70 points, and it might be a good idea to use wider stops, because even though you're increasing your stop loss size, the profit should also like if the trade goes in our favor, it'll probably run for more than 100 points or more than 60 points. You get me? Like the same way that the stop loss could be bigger, you're gonna have also price run the other way much more as well. So it's always that game of risk to reward, and then also covering your you know, your key levels or whatever, so you don't get stopped out. And just managing that. But yeah, this was with a 30-point stop, and then basically price, I mean, honestly, right away it just kind of smacked. You know, this was from 10:14 all the way to 10:19. So in 5 minutes, we had a 2-to-1 trade. Now, there's a lot of days where like you won't get it that fast. You know, that's why I started doing the scalping strategy, because like I know that with the scalping approach, you'll find more opportunities where you can be in and out of the market in less than, I don't know, 30 minutes, 15 minutes, 5 minutes, versus Liberty X, where most of the time the trade will take, you know, I don't know, half an hour, 15 minutes, an hour, 2 hours to fully play out. So, but yeah, this was the Liberty X setup. I mean, it's literally textbook, to be quite honest with you. You had a 4-hour candle that was bearish, so you're looking for sells. We're breaking Asia as we are also breaking 10 a.m. price, so that's an alignment. And then the VWAP is sitting clean above, so there's nothing to hesitate on. Like, you just literally waited for the manipulation and the cross back. And once you get that cross back over, you're in, you know? And yeah, 2-to-1 plus. I always look for 2-to-1s. You know, if you want to hold for more than a 2-to-1, like some people might take break evens here if you tried holding for more than a 2-to-1. This ended up running obviously for more. Like you could have gotten, I think, like a 5R. It's like 4.6 right here. So this is the thing, like you're never gonna know 100% whether the market is gonna give you this crazy ass pullback here almost to break even. And for some people it probably was break even. But I always teach, like, even if you do 2-to-1 trades, if you're executing properly, you know, with Liberty X, you're gonna have maybe like 1 or 2 no trade days, 1 or 2 good days, and then a lost day. And so even if you have like in, you know, Monday, 0 trades, Tuesday, you know, loss -1, right? And then you have like, you know, Wednesday, +2, and then Thursday, no trade, and then Friday, +2. Like, you know, you could have maybe some of these trades that you could have maybe held for more than 2R, but it got complicated along the way. But regardless, you have a +3 week right here. you know. Now again, +3 for like some people might not seem like a lot, but ultimately if you're taking less trades, you can risk more. So if you're risking, because you're only taking 5 trades a week, for example, like 1% per trade, you're at a +3% for the week, which is pacing for a 12% month. And if you have a 100K account, that's $12,000. You get me? And so, and that's just one funded account. So I always say the same thing. Like, you take less trades, you could risk more. You take more trades, you gotta risk less per trade, because typically, if you're taking a lot more positions, you can also have more losses, a bigger losing streak. Maybe it's not such a filtered out high probability strategy that has a high win rate. So these are all things you gotta calculate in your head. Well, not in your head, but like, you just gotta have the math done of how many trades am I taking per week. And once you know that, and you know what capital you're working with, or if it's a funded account, you just gotta make sure that you can sustain your losing streaks and bounce back. But you're not gonna know what your losing streaks are if you don't backtest a strategy that has specific criteria. Like, if you're just taking whatever setups form and you have no real way to track it, your results are going to be scattered. You get me? The thing is, a lot of people are taking signals from 5 different people, or they're trading 3 different strategies at the same time. They're not really tracking anything, and they're just kind of hoping it works out. If you hope it's going to work out, you're probably just going to lose money. It just is what it is. You got to come prepared. You got to know what to expect. So again, I haven't even talked about the scalping stuff yet because you don't even need it. I'll be honest. It's just, you're going to have to be a trader that is very quote unquote inactive, meaning you're not going to take even a trade a whole day. Like, you're going to probably take 2, sometimes there's even 3 days of the week that you don't take a trade, plus Saturday and Sunday that are already no trade days, and you find yourself only trading 2 out of the 7 days of the week. Some people are like, most people are so new, like their first year. Like, a lot of you guys are probably in your first year or whatever. Like, you're trying to take as many trades as you can in a day every single day. But at the end of the day, it doesn't matter how you feel or like, how excited you are. All that matters is the math. Like, are you making money or are you just doing it for fun? That's really the biggest thing. If you're trading for fun, whatever. I mean, who cares? I mean, I wouldn't use real money. Then you might as well just paper trade and have fun. I don't know why you would do that though. But you go have a different hobby. But if you're trying to make money, like, you don't need to trade all the time. You just need to know what you're looking for. And if the market gives you what you're looking for, you trade. If you don't, you don't trade. After TP2, oh, that's something else. So for Moses, I don't trade gold. So to be honest, I'm not gonna analyze it because I haven't even looked at a gold chart in forever. If you're in Akashex, there's great gold traders. Arabella scalps it. Joel trades it. And there's just a lot of people that do gold in Akashex. I only focus on NASDAQ because I don't really need to trade anything else, to be honest. As far as like targets, yeah, you can look at like, where's the sell side liquidity? Where are there other fair value gaps? And then, like, when I look at targets, these are the things I look for targets. You're gonna look for liquidity areas, which could just be highs and lows of price, depending if you're buying or selling. So if you're selling, you're looking at where the old lows were, because when it hits lows, it could reverse. You look for fair value gaps on the higher time frames, like 5 minute, 15 minute, 30 minute, 1 hour, and then you just look at fixed RR targets, right? Like hitting 2R, then 3R, then 4R, and then just trail stopping along the way. That's really all you could look for, in my opinion. You look at highs and lows. You're just looking at where things can bounce. When it comes to the fixed targets, that's when you don't know. Like, these are the 2 things you can spot. And then this is just creating a mechanical approach to make sure your math is profitable. Because if you're closing 1-to-1 trades or less all the time, I'm not saying that's like if you there's people that trade 1R strategies, but they know exactly what they're looking for. They know their win rate, and it's like on purpose. But a lot of people that close less than 2R, most of them is because they're just scared, or they, you know, they just get scared. They don't have confidence to hold the trade. You know, they just, I don't know, they just pull out early. So that's not that's an execution error. That's emotional trading. It's not really based on statistics or confidence in your system. It's just impulsive, emotional driven decision making. So again, if you have 1R trading systems but it's purposeful, fine. You get me? Like if you trade 1R and you win 6 or 7 out of 10 trades, you're going to be up. Not by a lot, but you're going to be up. And so you can do it that way. If you have 2R trades, now you can afford a lesser win rate. If you have the more R multiples you can squeeze out of every win, the more you can afford to lose out of every 10 trades, 50 trades. You get me? Because at the end of the day, math is just going to be, you win out of every 10 trades, like what's your win rate, and then what's your average risk to reward. And then when you combine those two numbers, you're going to see whether you're losing or making money. So you just got to know those principal things. Like if you guys are still not understanding risk to reward and win rate, it doesn't matter what strategy you're learning. Like you're wasting your time. You need to understand how the math makes you money. It's like you're trying to learn calculus and you don't know what 1 + 1 is. You gotta start there. So understand whether you trade my strategy or not. Doesn't matter to me. I just want you guys to win. And most of the time people are not winning because they're just losing more than half of their trades, or they are changing their risk per trade every single trade. Like, oh, I'm feeling good, I'm gonna risk 5% on this trade. Oh, I don't like this trade, I'm gonna risk 1%. Like, I don't think that's a smart idea. A boot camp. Well, so a couple things. If you're on a Koshex, first of all, let me log in here. If you're on a Koshex and you go to Academy, and I'm gonna be uploading some new stuff on here. I know I sound like a broken record saying that, but like it's kind of out of my hands when I make the videos, and then I have to have my tech team put it, and sometimes there's issues. But it should be, fingers crossed, there like early this week. But yeah, when you go to Educator Series on Akashex, you'll find my profile here, and then you'll be able to click Start Now, and then there's all these different lessons. So basics is obviously very important. It'll teach you like how a candle works. Open, high, low, close. So that is where everything starts. It's understanding one candle, because you can't understand liquidity or fair value gaps or trends or anything without understanding like the base thing. It's the same thing like if you're studying human anatomy, you got to understand how like cells work. And then once you understand how cells work, then you can talk about tissue and organs and then bones, and then you have your whole body, right? So everything has like the macro and then the micro stuff. So the most micro thing is a candlestick, where a candle opens, forms a high, forms a low, and closes. Understanding wicks and bodies. Understanding then, patterns like uptrends, downtrends, consolidations. You start understanding what like a break of structure is, a shift of structure, like all that stuff is things that I will show here. Then I'll talk about news and all that. But point is, all of the quote unquote boot camp stuff is here. The new thing you'll see is the Liberty X video that I don't have on here yet, that will show like this specific 10 a.m. strategy that I was just talking about right now. Because what's on here is just like me talking about Asia high and low breakouts or whatever. So I know that has to be updated. The scalping stuff, I don't have a video for it either, to be honest. That will probably not have a video for it for at least a while, because I don't even really know if the community is like fully like into it. And I don't know, I always do like a rollout where we like not experiment with the community, but like I get a feel for like what people need and want. That makes sense. So I just literally put out the Liberty X stuff like a month or two ago. It's probably pushing 3 months now. But yeah, it takes time for people to like uncover a strategy and then start to get curious about it and then practicing it and then finally starting to kind of get it and then getting really good at it. You know, all of that can literally take 6 months, a year. So we're not even in month 3 of Liberty X. So it's like, I don't want to throw in now the scalping stuff and then just completely toss Liberty X to the side, if that makes sense. So I feel like the scalping stuff that I've been showing is really for more advanced people that are like, I would only really look at the scalping stuff if you are trying to accelerate payouts or have like a system that you're gonna try to use on like futures prop firms that are, I guess, more manageable with a scalping approach versus more of like this intraday approach because of intraday trailing drawdown and those type of things. Some of you probably don't even know what the hell I'm talking about, which is the issue. So if you're trading CFDs, if you're newer, if you're trying to just learn trading, Liberty X for me is the best because you're going to take 5 to 7 trades max per week. If you take more than that, it's probably because you're just trying to force the same setup over and over on the same day. But there's really like 1 or 2 good setups in a day. And then there's some days you don't even take a trade at all. So that's how I know you shouldn't have more than 5 to 7 setups at the end of the week. You get me? So I think that's a good starting place for people to like not burn accounts every freaking 2 hours and not feel like super overwhelmed with too many setups. But there's people that have been trading for years or like, you know, and they just come to my stuff for like, I don't know, some little different things they could add to their repertoire. I think that's where understanding the whole concept of liquidity grabbing and then inverse fair value gaps and scalping it that way, again, can help you like beat intraday trailing drawdown a little bit easier and just have more trades to take with a different style. So yeah, I know I'm bombarding you guys with stuff, but if you don't understand what I'm talking about, that's exactly my point. You should be starting slow and starting with this stuff and then on my live sessions. If you're able to keep up with everything I was just saying, then maybe you can look into the scalping stuff and you understand what I'm saying. If that makes sense. I'd like to know, but it's hard. Honestly, like what makes it hard is you just not having practice with it, or you just haven't studied it enough. You know, it's like trading in itself. Yes, it's hard, but a strategy is not really the hardest part. Like if you understand the rules for getting in, but I just know that you haven't practiced it for a long time because I haven't even taught it for more than like a week and a half. So, you know, there's still a lot of work to be done with understanding how to trade that strategy. I'll give you guys an example of something, right? So, well, I already showed you like one Liberty X setup, and then I'll probably just show you like what I was doing with the scalping stuff, right? So something I like to do for the scalping approach, and you have to understand like how inverse fair value gaps work. And here's the issue, like sometimes Liberty X could be showing a sell and then the scalping stuff could be showing you the opposite direction. And so I don't want you to ever like confuse yourself. Sometimes the scalping approaches that I do are in alignment with the same direction as the Liberty X trades, and that's really where it's the most powerful to work it out. So for example, let's bring it back to 10 a.m. again real quick. All right, so 10:01 a.m. right? If you know about Liberty X, you know that we should have a sell bias because of this 4-hour candle and all that stuff, right? But let's say you were trading the scalping approach, I would still keep in mind this concept of the higher time frame narrative, because if you're fighting the higher time frame, you're only going to be able to catch counter trend trades when you're scalping against the higher time frames. And so unless you pull off like a unexpected crazy reversal, then you can kind of get away with it. But more times than not, if you're going to trade the scalping approach with the inverse fair value gap stuff, you still want to be in alignment with the higher time frame stuff, because if you fight it, you probably can still get a win, which I'll show you one for example, but it doesn't run for a good risk to reward ratio, and you're gonna take break evens. So like for example, with the scalping stuff, something that I was showing was inverse fair value gaps after an important area of liquidity gets swept. Now there's many ways to filter that, but for example, I like the session-based liquidity stuff to be something to pay attention to. So this is Asia low, which is also 10 a.m. open price, right? So basically, if you see that we are, let's say, overextended, like we've already been selling off for quite a while and we're due for some type of pullback or reversal, you're gonna look at those important areas of liquidity. So like this is gonna be Asia low. And you start looking at, let's say, the 1 minute fair value gaps that we're pushing into that area. So this is the liquidity getting taken at that specific time. I'll make this like red so it stands out a little bit. Like this, right? So I know that this is Asia's liquidity that's getting taken. And if you understand liquidity from sessions and everything, you know that when price hits those areas, it could give a very strong reaction the other way. So how do you know if it will or not? Well, one thing you can start looking at is whether the fair value gaps that were bearish in this situation because it's pushing us into the low. If you see that that starts to get invalidated, you have a trade on your hand that you could potentially take with this approach. And basically what you're looking at is, again, some type of important liquidity gets hit, in this case Asia low, and then you start to see if this fair value gap gets invalidated or not. Because if a fair value gap is going to be respected, it should tap into it and then reject and keep going, right? But if price breaks through that fair value gap very aggressively, then that shows you that buyers have now stepped into some control. Maybe not for a huge trade, but at least momentarily they are taking the momentum. And then you can look for trades where basically you enter breaking past that fair value gap and you cover the low of that gap with your stop loss, for example. So like a trade setup could be something like this, where you take Asia low and then you start waiting to see if price can break above this fair value gap, and then you start looking at a trade like this. Now the stop loss, again, you can play it different ways, where like you cover the low of it or like slightly below it. In this case, like this is like a 10-point stop here, and then there's like a 15-point stop here. Somewhere in that range between 10 to 15 is like a decent area to put it at. And then yeah, you just target other things up here, like maybe you can look at these other fair value gaps here, like this one, you have this one. Like these are places where price can go up to if you're gonna buy, and then maybe hold to like one of these gaps. So like tapping this gap with a 15-point stop, you're pushing like a 1R trade here. Pushing to this one is 2R, and pushing to this one's about 3R, right? So at least you're gonna want to look at when price goes like half R multiple to a 1R, something like this, and then moving your stops to break even. So yeah, basically price grabs that low, and then you see price come up, and boom, you see it starts breaking through. So you have an entry here. Okay. You see price retrace cross. And now you have a +1R trade here. At this point, you gotta definitely move some stops to the the entry here, for example, and then see what happens. And in this case, you see that price comes back down. So this is the issue. Yes, you have the criteria of what I was showing you with, like, for example, liquidity gets hit, inverse fair value gap happens, price starts pushing up. But this is what I'm trying to tell you with this issue of going against the higher time frame. If you're going against that candle, you might find entries that technically work, but you're gonna have to micromanage them very tightly, and you're probably not gonna get more than a 1 or 2R, unless you just happen to snipe the perfect low, which is possible, but it may not be duplicatable. You get me? Like, it might not be something you can easily do every single day. And honestly, like, everything that I try to show you guys is like, I want you to be able to replicate it often, because if it's only something that happens once in a while, I don't think that's a good strategy. You want things that kind of reappear in the market a lot. Now, a better trade than trying to take that one, because I'm sure some people probably are learning and they maybe went for that trade right there. But again, you're going against the higher time frame stuff that I was just telling you, right? Now, let's look at what if you go in the same direction instead of trying to fight it, for example, right? And so what you can look for is like bullish fair value gap getting invalidated instead of the other way around. So for example, in this situation here, right? Overall, we know that we have that 6 a.m. candle bearish. You know, this candle here is also bearish now, pulling into 2 p.m. If you have a bearish bias, then what you look for is the opposite to happen, where you look at the bullish fair value gaps, and you have one, for example, here. And remember, all the confirmations of like Liberty X are still there too, where you know we're looking for sells. So if price, for example, you know, forms a bullish fair value gap above 10 a.m. open price, and we see it kind of invalidate and break through, then you have a sell potential trade there, right? So your setup would be looking, it's the same concept as what I just showed you. It's just instead of a bullish example, you're looking at a bearish example. And then yeah, this is like about a 15-point stop as well. If you want to use something like 20 to cover it, then you have something like that, right? And then you wait for a candle to basically close there, and you see it break right through it. And you have like a 2-hour trade right here. And that just gets eaten through completely there. You know, and if you want to go for like, let's say this low, for example, you know, maybe you have like a 3-point-something hour trade there, you know. Well, now the market open here, kind of closed over here. But 2+ hour trade, you know. So the whole idea of inversing gaps and everything like that, you're going to see it happen a lot, especially if you look at smaller time frames. It's going to be something that you can, like if you trade every single inverse fair value gap or fair value gap for that matter, you're going to lose money, because you have to filter out many more things than just, oh, I see a fair value gap getting invalidated, let me jump into a trade. Like if you just do it that way, you're going to be in some trouble. You still need to pay attention to timing, like, you know, did it hit some type of important liquidity, like Asia high, Asia low, London high, London low. It could even just be like an important previous low or something, you know. Just depends. Like I'll give you another example of something here, right? So if you look at this situation when we were here, right? In this example, there's a couple other things that you might be able to point to. Like for example, you have this fair value gap here. Now for newer people, there's no way you're gonna spot these fair value gaps without experience, because they're not gonna stand out to you. That's the thing. You know, like you do have to have some skin in the game to be doing this type of aggressive, you know, smart money concepts type of trading. But you have this fair value gap here that you're tapping into. And so when you start dropping time frames to smaller time frames and you start seeing a reaction into that, right? At that point, you can start looking at, oh, damn, you know, do I see some fair value gaps? Do I see something I could potentially trade here? You know, that's where you can scan time frames between like a 1 minute, 2 minute, 5 minute, and look for setups like that, right? But yeah, basically you'll tap into something like that and you'll see this 5-minute fair value gap here on the sell side. Okay, and you can see that that gets invalidated there. The difference of this and like the one from earlier is that this taps into the fair value gap. We've already dropped significantly from 9:30 open, you know. So now if you look at this, you have a pretty decent zone that you can, you know, look to trade off of here, right? You have like a 30-point stop here, for example. And this is a trade that runs for 2 point something. It probably runs even a little bit more, but you get the point. Like this is an example of you tapping into some type of fair value gap, getting a really strong reaction away, getting an inverse fair value gap formed there, and then you jump in cover the low, target 2 to 1 plus, and that's it. So again, it's not easy, but it's understanding all these concepts of like liquidity and fair value gaps very thoroughly to be able to like even understand what I'm talking about right now. So this is stuff that's gonna be many more reps, and this can definitely cause you to struggle a lot more, because when you scalp and when you're going for like, you know, lower time frame trades with a lot more frequency and a lot more stuff that you have to kind of like know how to spot and manage very quickly, it can lead for like, you can get bigger trades faster. You know, like this is a trade that from 10:55 to 11:45, so about 50 minutes, you get a 3 to 1 plus trade here, you know, and you can find multiple types of these setups in a single day, you know, but you gotta be able to keep up with that. So yeah, well, this is obviously like just me on a Sunday market outlook too. I try to go way more in depth throughout the week when we're on the actual live sessions and we have real price instead of just hindsight, because hindsight is obviously a lot easier. When you're actually doing it in real time, that's where it's trickier, right? But yeah, that's pretty much it for what I wanted to talk to y'all about so far today. So I'll see you guys on the sessions tomorrow. I will, even though the market's like technically closed or like it's a holiday, I'll still stream, but tomorrow's in Spanish, so just keep that in mind. Tuesday, Wednesday, Thursday is where it's English. So yeah. But yeah, I'm gonna be explaining on every session Liberty X and also the scalping, because sometimes we have like Liberty X setups that never form while we're on stream. Like we might not get, like it might be a no trade day, for example, for like Liberty X setups, but then we could find like some scalping opportunities. You know, and then sometimes Liberty X will shine and the other strategy won't. Like that's what happened on Friday. Friday, the scalping stuff wasn't really there, but Liberty X was awesome. It produced a 2R trade first, retraced, and then did like 5R. So yeah, but I'm gonna let y'all go. I hope you have an amazing rest of your night. I'll see you guys on the sessions. Oh, one thing as well, we are doing free calls every Tuesday, where we do these get paid marathons. So I will actually be using this scalping strategy during Asia on those sessions. Last time I couldn't really identify any setup that I liked. It's not really the best session to do it either, to be honest, but you know, there's still opportunities. And then Arabella does great during Asia session with gold, and then Preston doing his thing with US 30. So those are always fun. We had like 700 people on that call on last Tuesday. So obviously we're gonna eventually work that into like thousands of people, but obviously it's you guys tapping in and then getting people to tap into those calls as well. So that's a free Zoom that we do every Tuesday, or at least for the foreseeable future. We're gonna try to do it every Tuesday. And yeah, man, these are great traders aside from myself, to say the very least. So it's gonna be fun. So yeah, we'll have that also in the evening for everybody to tap into. So yeah, I'll let y'all go with that. Hope you guys have an amazing rest of your nights. Much love to all y'all for always being here. And yeah, let's continue to crush it this week. Much love, y'all. Peace.